Hello guys, and welcome back to the Cedi investor. Welcome back to this channel. Before we start, please subscribe to the channel and let's get into it. In today's video, we are ranking some of the top companies on Ghana Stock Exchange, their free cash flow. Now, if you are new to investing, you might ask, what is free cash flow? And that's basically what you as an investor want from a company. It is the actual cash that the company has generated from its operations. So basically, it is cash flow from operations minus any capital expenditures. And why is this important? I'm sure you would want to ask if you don't know. Free cash flow is very important because it is, like I said earlier, the actual cash that's left down. And this cash is what companies normally use to pay dividends. So when we say companies are paying individuals or shareholders dividends, the money they get is from the free cash flow. And also, if companies want to reinvest back into the business, this is the free cash flow. The cash they get from free cash flow is basically cash that they use to reinvest into the business. So free cash flow is like one of the greatest things for a company. You want to see your company consistently growing its free cash flow. And for my investment strategy, free cash flow is one of the best things I like to look at. I want to see companies growing free cash flow, and not just growing it, but at a very fast rate. So how are we going to rank free cash flow of these top companies? We are going to rank them based on three things. Number one is how fast are the companies growing their free cash flow? Are they growing at a fast rate, or is it kind of slow, or not that fast? Two is how predictable and consistent the free cash flow is. Is it a free cash flow that they've been growing it for some years now, or like a while, they have a track record of growing their free cash flow? Or is it something that's very, very volatile? Some years they grow it, some years they don't. You can't even predict if they're going to grow their free cash flow or not. And lastly, I want to also rank the free cash flow based on the valuation behind the free cash flow yield. The higher the free cash flow yield, the better it is for you as an investor. That means you get to enjoy way more of the free cash flow of that particular business. So you want to see that yield, or the free cash flow yield, up. So these are the three things that I'm going to use to judge the free cash flow of some of the companies on the Ghana Stock Exchange. And I'm saying some of the companies because maybe when I start the video, you guys will notice I'm not going to be ranking any of the bank stocks. You might ask why, and that's because of the nature of banking companies. Banks are highly leveraged companies, so basically they use debt to make money. When you deposit money to the bank sees that deposit as a liability, because they have to use that money to go and work, lend out to people, or either invest somewhere to get returns, so that they pay you back your money with some interest, and they also benefit from it as well. So usually banks use a lot of debt to make money, so their free cash flow is mostly negative. So it would be quite unfair to judge banks by free cash flow. It's just a metric that doesn't work with most of the financial institutions. So just something to keep in mind. Now let's start off with MTN Ghana. Looking at the free cash flow of MTN, we can see that it's just a beautiful trend. Look at this. One of the best free cash flows like you generally be getting from a company. They've been growing their free cash flow year on year, and right now it sits at about 6.4 billion. Amazing. The free cash flow per yield is also growing. So basically, you as a shareholder, you are benefiting way more from that free cash flow. Your contribution to that free cash flow is growing. Yeah, you are basically getting more. So if that should translate to either reinvestment back into the business, or even through dividends, you are definitely going to be benefiting way more. So that's very, very good to see. We can even see that the free cash flow margin, it has been very consistent at around 25 to about 30%. So they've been very consistent in making sure to grow that free cash flow. One thing that I would say it amazes me when I look through the statements of MTN is that despite growing and maintaining a healthy and fast free cash flow, we can see that their capital expenditures right here, it has been growing. You can see that the capital expenditure went from 351 million in 2022 to now 3.8 billion Ghana cedis. So they are always spending on infrastructure, trying to create more efficiency in terms of the products, and their operating cash flow too has been consistently growing. we all know about the revenues of MTN, their business model, the products that they provide, mobile money, data services. And all of these products and services are crucial and vital in Ghana. All of them have been growing. I don't think data is going to slow down growth anytime soon. Mobile money is just on an upward trajectory, so I do expect their free cash flow to continue growing at a faster pace, and I even do expect them to improve upon their margin if they are able to be a little bit more efficient when it comes to minimizing their costs. I can see the free cash flow margin improving significantly. So with MTN, I'm going to put them in the S tier. It's just amazing. I'm not seeing anything wrong with it. They've been consistent with growing their free cash flow. They've been growing their free cash flow at a fast rate, and all their free cash flow are predictable in terms of how the product is. You can predict that MTN is going to continue growing, and that should translate into the free cash flow of the business. Up next, we have Farm Milk. Looking at their free cash flow trend, you can see that over the past 3 years, they've been growing it at a massive rate, now at 126 million. But looking from 2020 to now, it has been quite volatile, especially back in 2022 and 2023. They had negative free cash flow, but I've seen the company within the past 3 years have improved massively. So I do like the trend of how they've now been more efficient in trying to be more profitable and also trying to grow their free cash flow for the shareholders. When you look at even the free cash flow margin, I also like what they've done here. They've improved the margin. So right now, more of the revenue is going towards free cash flow. Now about 14% of their sales is being translated into free cash flow. Hopefully, I'm looking at a figure around 20%. I think if they are able to get it to around the 20% mark, that would be way better. But they've been growing it, and even my free cash flow yield as well has been very good. I'm going to put Car Bank in the B tier. It's good, but it hasn't been consistent. From the graph, you guys saw that over the past 5 years they were negative until up to 2023, and yes, even though from 2023 going, it has been very good. I would want to see them being more consistent with our free cash flow, and try and increase the margin and the growth of that free cash flow. So yeah, for now I feel like B is an okay place for Farm Milk. Up next, we have Guinness, and I'm going to also put it at B class. And why? Because it's very similar to Farm Milk. When we look at its free cash flow, we can see that over the past 5 years, it has been very volatile, with the past 3 years, just like with Farm Milk, being very small, and over the past 2 to 3 years, they've been improving on it. This year, however, we can see that it has dropped massively, and that's just because if you look at its operating cash flow, it went down from about 567 to now around 367. So if you're a shareholder of Guinness Ghana, you should pray that people should drink in more alcohol. You understand? The alcohol association, them for the buy more so that your free cash flow can just improve and you can benefit more as an investor. Up next, we have SIC, and SIC also falls under a financial institution, so I'm not really going to judge them heavily on free cash flow as well. It's very similar in terms of banks when it comes to using leverage or premiums, but then you can see that their free cash flow here is very good, so I'm going to give them an A. Then we move on to another similar company, Enterprise, also an insurance company, and yes, it's a little bit different. Their free cash flow has been very stagnant from 2021 to 2023, but then you can see massively moved forward in 2024. So I would say it's a little bit predictable, because yes, the free cash flow, it hasn't really been going at a fast rate, but then it's been predictable for over the past few years. The free cash flow margin has ranged between 40 to 29% each year, so there's a little bit of consistency in terms of the free cash flow. And I'm also going to put them in the A tier category. I don't think it's the best I've seen, but yes, they've been solid and consistent in terms of free cash flow. Now up next, we are moving to the petroleum companies, the fuel companies, and these companies are normally bought by investors in Ghana because of dividend payments. And if you need to be consistently paying out dividends, you need your free cash flow to be high and always growing at a fast rate. Starting off with Total, it's kind of dipped in 2022, but now all-time high 416, more than doubled from 2024. So yes, they've improved their free cash flow by quite recently. But they've been consistent in trying to grow it from 2023 as well. I think almost all the companies have had a similar trend in terms of their growth. The free cash flow margin has been a little bit of a dip, but then it's getting back to its previous high. It used to be around 6% in 2020, and now it's about 5.74. Now looking at its competitor Gore, or the biggest petroleum company in Ghana, the story is a little bit different. We can see the free cash flow has been very dilly-dallying. Like, it's been down negative almost 690 million in 2024, and it's still down about 300 million in 2025. It was up in 2022, and ever since 2022 it has never been up. So they've just been having negative free cash flows, and for a company that is consistently paying out dividends, it's unsustainable. So looking at the petroleum companies, I'll put Total Energies in B tier and Gol in D tier. It's very bad. Now up next we have BOPP, Benzo Oil, and we can see the free cash flow here. We can see that it's been growing on 2023, where it did massively. This free cash flow margin has been around 35 being the highest, to around like 10 to 17%. So I'll put BOPP in the C tier. They haven't really been growing their free cash flow. They've been consistent with a stable free cash flow, but I want to see them consistently growing their free cash flow, and I want to see some level of their margin improving. I think over the past 5 years they've not really been consistent with growing their revenue and their net income. Moving on, we have Clystone Ghana. Now this is a company I started researching this year, so I don't really have a full information on the company, but I know it's an IT company that deals with a lot of financial solutions for banking, so like ATM processing, and all those remittance and all other forms of like products that banks use. They work with a lot of banks in Ghana, not all of them, but some of the banks in Ghana, when it comes to their ATM processing, their remittance, the G switch, all those kind of IT financial processing solutions. It's a company I would love to do more research on, but in terms of their free cash flow, the company just became profitable, I think, as of last year. So the free cash flow is not anything to write home about. They just did about like 10 million in 2024, and it's about 9 million, but since then it has been negative to literally no free cash flow. So since Clystone has no track record, they recently just even started making profits, not to talk about free cash flow. So I'm putting it in the D tier for now. I need to see way more when it comes to even maintaining profitability. Then I'll even start thinking of free cash flow. I don't like the fact that I don't know, I have to check, maybe I'm wrong, but I think they announced dividends, and I was not happy with that, because you just gain profitability. I think you should have took some time, reinvest back into the business, try and sustain profitability for some time now before you declare dividends. But maybe I digress. I don't even know if it's true or not. I'll probably have to check. And finally, we are going to end off with Unilever Ghana, one of the businesses with a very dominant moat in Ghana. They have about products in almost every sector: nutrition, health, beauty, skincare. We all know about Pepsodent. People even going to buy toothpaste don't even say I'm going to buy toothpaste. You say Pepsodent. Even if you want a different form or version of it, you be like, oh, chalo me Pepsodent way version, like, you understand. So they have a very dominant moat in terms of their free cash flow, though, because this video is about free cash flow. They have been very unpredictable when it comes to the free cash flow, having some years very down, very negative, some years very big, between 2023 179, but 2024 and 2025 back down about 19 to 12. So in terms of the consistency, it really has been like hit and miss. they've not really been that consistent. They've not been growing their free cash flow at all because of the inconsistent nature, and the free cash flow margin as well, very inconsistent. The free cash flow per share as well, as an investor now earning about 0.21 as to about 2.87 in 2023, and even negative in some years. So it might be a great business, but then when it comes to the free cash flow, it deserves nothing but the DTA. They have to do way more when it comes to the free cash flow of the business. I need to see free cash flow growing at a fast rate, and also the margins improving even marginally over time, and being consistent with the free cash flow. I want to see predictable revenue coming into the company, seeing your net profits increasing and increasing and increasing, and that revenue translating into bigger actual cash for the business that can be used for either reinvestment purposes, or just send it to me as a shareholder in the form of dividends. I really appreciate that. So that's my tier list. Comment down below what you think about it. Is there anything you have changed? Is there any other company you think deserves a better spot or not? I would love to know down in the comments. Thank you so much, and subscribe, like, share to people you think might be interested in these types of video, so that we can continue growing this community. Thank you so much, and have a wonderful rest of your day.